Hello, fellow traders. 'Tis I, the Rumpled One. It is Friday, March 17, the year 2017. I Closedifference, TRO modified. I found an indicator called the I Closedifference here over on the MQL5 forum. Says it detects currencies in the chart and compares the current close value and all the pairs of the currencies, trying to understand if the currency is strong or weak. And so this is how it looks. Here's the thread right here. And so when you load it up on the chart, here we go live right here. It says the pound is neutral and the dollar is neutral. You see it's comparing all the pound pairs and all the dollar pairs. And you see where it is. It's located over here. At 60 means H1. Well, you know, this is the original version. And then I made a TRO modified version here. In fact, I made a little change. So let's see, that's percent, that's pips. I'll explain what those mean in a second here. I guess I should have started here first. X offset, call it 650. I had to move it over a bit. Oh, and for some people, they never know what this little triangle is. It's the chart shift. You see here how it allows you to move the chart so you can plop indicators here. So when I write my indicators, I always go off of this corner and then move them away. But most people start over here. But on the original, I just stuck that in. That's what I use for when I'm testing code. I just stick it in a blank file because I've got so many indicators that if I add one, it bumps one off the bottom. So you can see here, there's no way to move it around on the chart. So that was one of the first things I changed. And so you see there's 4 different displays here, and the other one only had 1. Once again, that's because I added some options. There's actually 6 options. So you notice here I put a percent sign because this is really what he's comparing is close minus the open, then you divide it by the high over the low. Actually, I'm sorry, it's the close minus the low, and you divide that by the high minus the low. So you basically get a percent in range. And then right here, we have close versus the current. And this one is in pips, because I thought it might be a good idea to be able to see in pips rather than just like strong or weak. Okay, so this way you can see live in pips if it's strong or weak, and the same here. This one though is based off of the matrix, which is right here, markets made clear, where it's really a simple matrix. So if for the euro dollar, for this to be a 1, it means the close is above the open. Okay, because if you look the other way, dollar versus the euro, it's a 0. So if the euro dollar was down, this would be a 1 and this would be a 0. Just real simple comparison. I like that. So I implemented that matrix inside of this indicator. So you can see here for the pound dollar, which the pound is the base currency and the dollar is the quote, it's up. But if you go the other way, dollar, pound, you see it's a 0. Real simple display. Nothing, no fancy calculations or squiggly line type stuff here. Now, you can see here what I did was, I like that pip difference. So what I did was I made the matrix to also be able to show the difference in pips. So right here you can see pound dollar close minus the open is 35 pips. So pound dollar, here it says 34. That's just a rounding difference right here. See, now it both says 34. I think this one just truncates and this one rounds. I'm not sure which is which off the top of my head. But as they would say, close enough for government work, right? So you can see here, pound dollar 33, dollar pound 0. So if you add them up this way, it's the total 4. And then if you add them up this way, it's total against. And so this is a separate, this is the currency strength option right here. Let's see which is which. Yeah, currency, show currency strength. So I added these extra options to the indicator. So all this one is doing is just showing if it's up or down based on the total. So for example, with the pound, we've got 189.4 and we've got 117 less. So if you take the 4 and you subtract the against, you get a number. And that basically is the strength. So you can see here, New Zealand's the strongest and the euro seems to be the weakest right now. And New Zealand's giving the yen a run for its money, literally. And you can see the euro's the weakest. Because if you look down here, there's only 1 euro. And you can see here, it's only 1 pip. And that's about to go away. But all the rest of the euros are red. You see? So that's how it works. It's real simple. Okay. That being said, how do you make money? Well, one way is you want to buy the strongest currencies and sell the weakest. So in this case, Japan, we would want to sell it against the euro. Well, it's not Japan euro, it's euro Japan, so you short it. Because when you short it, you're buying the quote currency and selling the base. Remember, this is not a currency. This is a currency pair. The euro is one currency and the Canadian dollar is another. So once again, the first one is the base and this one is the quote. So we're quoting Euro CAD, we're quoting in Canadian dollars. Like the Euro USD, we're quoting in US dollars. Oh, phone calls. Why do people call me when I'm shooting videos? Anyway, so that's how you make money. So once again, we see euro is weak. The yen is strong. So if we want to switch over to euro yen, we want to short it. Now, you can also, this is based on the time frame or chart period. So you see here at H1, we can switch back. That goes to D1. So you can see which chart period you're working on or off of. And here's the same thing. You see here I say H1. Remember, the other one had 60, but in this, now we have D1. And we were looking at the euro yen here. So you can see once again, see, based on this hour, we want to buy. Because the euro, that's H4. It's the euro 17 and the yen is minus 40. So this is telling you to buy it. So we'll be buying off the bottom. You see it's out of the rat zone, so it's a little late for me. But that's how you use this to make money. So what you might want to do in this particular case, since it's a down day, you wait for a pullback and then maybe you short it again. If that's the way you like to trade. If you like to trade counter the bias, the daily bias against the daily candle, you'd be trading with the H1. This is the way to go. So that's the matrix, and I guess my brain wasn't working well this week. It's taken me all week to get this thing right. I realized that the matrix should never have any negative numbers here. You get the negative numbers when you subtract the total against from the total for. And once again, I got that idea from right here, this currency strength matrix. I just adapted the idea, or adopted the idea, and then instead of just having a 1 and 0, I actually use pips. And then they have a little chart here telling you how to use it right here. Strongest and weakest. And I think they use daily, and sometimes they do weekly here. But you can go out here, marketsmadeclear.com, and check it out. And then once again, the original is located here at the MQL forum, I Closedifference version 8. And then as you can see here, I've been working on this all week, and I've deleted the old ones, and you can download it right there. No donation required. I know a lot of people like to give me heck about that, but you know, that's just them. So hopefully this will help you when you're trading. It's really simple. It always makes sense to buy the strong and sell the weak. There's a lot of different currency indicators out there, the CCFs and the relative strengths, and they all pretty much do the same thing. But I'm really liking this matrix and just this part here, just to show currency strength. Because see, just this one. So you can even get rid of that one and just have this. And then you can see which one is the strongest, which one is the weakest. So fellow traders, as always, it's not what you trade, it's how you trade it. TheRumpledOne signing off.